Berjaya Food started its FY23 on a high note as it saw its first quarter net profit nearly triple to 34.5 million thanks to higher revenue from its Starbucks outlets and the turnaround of its Kenny Rogers Roasters business. Revenue for the quarter climbed 50.8% year-on-year to 283 million from 187.7 million, mainly due to higher same-store sales growth, particularly from Starbucks cafe outlets, as well as the full quarter effect of the new Starbucks cafe outlets opened during FY22. The group declared an first interim dividend of 0.5 cent per share. On a quarter-on-quarter basis, however, BFood saw a 15% drop in its net profit from the 40.7 million posted in the fourth quarter of FY22 as revenue slipped 2.8% from 291.3 million. Looking ahead, BFood expects Starbucks to maintain its revenue growth momentum and anticipates that the operating results of the group will remain satisfactory for the remaining quarters of FY23 despite facing inflationary pressures on its operating costs. CEO Datuk Sidney Quay says that despite these headwinds, the group will continue to work on managing its operational costs effectively and sustaining its growth momentum for the rest of its current financial year. After posting a net loss of 23.88 million in the third quarter of FY21, Malaysia Marine and Heavy Engineering Holdings returned to the black for the third quarter of FY22, recording a net profit of 15.9 million ringgit. MHB said this was due to both its marine and heavy engineering segments recording an operating profit for the quarter. Revenue increased by 5% year-on-year to 409 million due to contributions from the marine segment. On its prospects, MHB expects oil prices to remain strong after OPEC and its allies decided to cut production to stabilize the oil market along with the Russian invasion of Ukraine. As such, it expects capital spending by the oil majors to remain steady in the medium to long term. MHB also sees opportunities in the renewable energy space. The reopening of borders had also allowed entry of technical specialists, which impacted positively on marine operations and contributed to the segment's significant turnaround. MHB says it aims to replenish its order book by capturing opportunities in local and international markets while continuing to prioritize effective cost management and improving project execution and delivery through prudent investment in technology, people, processes, systems, digitalization and automation. TH Plantation saw its net profit plunge 46% to 14.37 million for its third quarter as a result of a fair value loss on biological assets. In contrast, revenue for the quarter rose 3.7% to 213.4 million versus 205.9 million on the back of higher average realized prices for crude palm oil despite slightly lower production volume. TH Plantation said average realized prices for CPO rose 9.8% to 3,997 ringgit per tonne from 3,640 ringgit per tonne a year earlier, while the group's CPO sales dropped 3.58% to 43,112 tonnes from 44,711 tonnes. Commenting on its prospects, TH Plantation says palm oil product prices are expected to remain volatile throughout the fourth quarter of FY22 in anticipation of higher year-end palm oil stocks, weather uncertainty and the coming low production season. Meanwhile, the group also said that it has taken all possible steps to address its foreign labour shortage, which is expected to ease in the fourth quarter of FY22. TH Plantations adds that it has also stepped up its mechanization efforts and transformation initiatives in all its estates where possible to improve generational efficiency. Overall, the planter says it anticipates a satisfactory financial performance for FY22 as it continues to undertake necessary measures to improve the fundamentals of the group. MSM Malaysia Holdings has filed a lawsuit against Gas Malaysia over a disputed sum of 10.32 million relating to gas supply to its wholly owned unit, MSM Sugar Refinery Johor. MSM said MSM Johor was forced to stop accepting gas supply from Gas Malaysia's subsidiary, Gas Malaysia Energy and Services, following the shutdown of MSM Johor's refinery operations due to incidents of leakages in the boilers in 2020 and 2021. GMES had in April 2022 demanded refunded the 10.32 million from MSM Johor via a take-or-pay invoice for gas supply. The amount is the alleged charges for the difference between the take-or-pay quantity and the actual quantity delivered in 2021, MSM said in a BOS filing. The group said MSM Johor subsequently informed GMES of its objection to the invoice, but GMES proceeded to issue a demand against the company on August 23rd, necessitating MSM Johor's filing of the lawsuit. MSM Malaysia said the group and MSM Johor are denying all of GMS's allegations of liability and claims for the disputed sum. It added that MSM Johor is seeking an order that the reasonable sum payable to GMES be assessed by the court. Hexstar Technology Solutions share price jumped to another record high of 15 ringgit after gaining over 10%, making it Bursa Malaysia's top gainer on Thursday. It eventually pared some gains to settle at 14 ringgit 98, which is still 10.2% higher than the previous day's close, with 247,100 shares changing hands. The company is now valued at nearly 2 billion after having surged 496% year to date. Over the past 1 month, the shares of the logistics provider rose 166% from October 11's closing price of 5 ringgit 64. This resulted in it being slapped with 2 unusual market activity queries from Bursa, one on October 19th and the other on Halloween. On both occasions, Hexstar Tech, formerly known as Complete Logistics Services, said it was not aware for any reason for the rise in its share price. Businessman Dato' Eddie Ong Chu Ming is Hexstar Tech's largest shareholder with a direct stake of 21.37% and an indirect stake of 50.11%. Over the last 5 years, Hexstar Tech had been trading largely below 1 ringgit until the sudden rise in late February last year, just prior to Ong's emergence as the company's largest shareholder in March 2021. For its first quarter of FY23, Hexstar Tech saw its net profit improve by 29.5% to 290,000 on the back of a 158% jump in revenue to 28.5 million ringgit. Besides Hexstar Tech, Ong also has interest in companies such as Hexstar Global, Kip REIT, Opcom Holdings, Classic Scenic, and most recently, Perak Transit.